Hello subscribers, and welcome once again to the latest produced video from the Inside Technician entitled The Hard Right Edge. Today I'd like to talk a little bit about the formation of pivot point lows as compared to superior resistance. In this case, we're looking at the Dow Jones Industrial Average end of day updated chart. And I'd like you to focus in here on this double top that was established way back on 7/7/2011, and then again a secondary top that was established here officially on 7/22/2011 before the market sold off sharply. This level right here broadcast out into the future at approximately 12,726.50 was a level that everybody was looking at to determine whether we were going to trade right through this or we were going to find that superior resistance and price would turn back around and trade to the downside. And the catalyst behind the major market moves, everyone knows who studies with us here and who follows the IMA webinar, is that volume is the catalyst behind the most significant market moves in the history of the U.S. markets. In fact, any market. As long as there's enough liquidity and volume will decide the length, meaning the duration of the trend, and where those trends change from one direction to another. Like here, we had the strong insider volume here, like here on December 16th, 2011, which started the trend to bring us all the way up to where we hit our resistance here in the red line outlined. Now, the most significant thing that I'd like you to identify with today is this volume spike that came in on 120. The question was, will this act as a catalyst to trade right through superior resistance and the market will keep moving up or not? And the answer has become, it is the sell-off from the institutional side, and we now know this because this chart pattern has played itself out, and I'm going to blow it up here. We now have an official pivot point high which is established from these 3 days on 125, 126, and 127. Now today is the 30th, and futures and the markets did trade down. Things have leveled off some. Right now we can clearly see that the volume here acted as the last few days up. Now things have turned back around. The other confirmation that is, and we did two of the most recent videos with reference to trend lines and support and resistance levels. This is your baseline level right here on this outside corner. Broadcast out to the future on your next point is right here. Connect, and there you have it. Now, if you had taken this line and you had broadcasted it out to the future using Metastock's professional program that I use every day to trade with, hit apply, you can clearly see the trend line violation came into play on 1/27/2012, acting as a confirmation that the point was not only established, but the long-term trend line that had been laid out from the baseline level at 1220 to 1/17/2012 had now been violated, and prices will trade to the downside for some time. So knowing that the prices are controlled by the insiders, the people who actually move stock prices, the people who actually decide where prices will go, here are just a few simple to learn, easy to implement, proven, time-tested techniques to help you become a better trader or investor. Know that the Foundation's Equities Trading course will start February 13th and runs through February 17th. Limited to 7 attendees only. We have 2 sign-ups, and it will fill up this week. For more information, you can just log on to the site at theinsidetechnician.com and go right to the Foundation's course tab, and everything's there for you. Thank you for joining us for the Hard Right Edge. This is Jeff Killian. We'll see you on the next Hard Right Edge production.